Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my Week in Focus. Well, after an unusually quiet week last week, we're in for some excitement this week. The key item on the agenda is Trump's address to a joint session of Congress Tuesday night in the U.S., early Wednesday morning GMT time. Now, press reports suggest he'll try to set out what he's done so far and what he hopes to accomplish in the future, particularly with regards to four topics: tax reform, securing the border, healthcare, and infrastructure. Now, past performance suggests his speech may be light on details. Furthermore, several of these important goals have apparently been put on the back burner recently. So while the speech may lift sentiments towards the dollar initially, to be honest, I wonder how long any boost from it is going to last. Then on Friday, Fed Vice Chair Fisher and Fed Chair Yellen both speak. The key here will be if they respond to Trump's speech and comment on how his vision of fiscal policy will affect their vision of monetary policy. Meanwhile, the important U.S. indicators out this week are mostly expected to show the economy continuing to expand at a steady, gradual pace, a Goldilocks scenario for the dollar. Monday's durable goods figure is expected to show relatively robust investment. Tuesday's second estimate of U.S. fourth quarter GDP should show growth revised up slightly around the limit of sustainable non-inflationary growth for the U.S. Wednesday's personal income and spending figures are forecast to show incomes growing steadily and spending up in line with incomes. At the same time, the ISM Manufacturing Index is forecast to show the expansion continuing at its current very healthy pace. All told, the data should confirm the Fed's thinking that the economy is on track and it can continue with gradual increases in the federal funds rate. That should be supportive for the dollar. Outside the U.S., the Bank of Canada meeting Wednesday will be a focus of attention. Although, actually, the market sees only a small possibility of a rate hike this year and almost no possibility of a cut. In that case, the market will be waiting to see any changes in the statement and maybe a hint of bias one way or the other. I expect little change in the statement and for the Canadian dollar to emerge, therefore little changed afterwards. Now, aside from these key events, there will be a large number of significant indicators elsewhere in the world. Globally, the final purchasing managers indices for Europe and the US and the other global PMIs will be released, including those from China, Britain, and as I mentioned, the ISM indices from the US. China's PMIs are expected to be down slightly, which could dampen the market's appetite for risky assets, in focusing on the Australian dollar. In the EU, the key here will be, as usual, the German inflation data on Wednesday, followed by the EU-wide CPI on Thursday. Now, although EU-wide inflation is expected to accelerate slightly, the core CPI measure is expected to rise at the same rate as in the previous month. ECB President Draghi has focused recently on core inflation, so as long as this stays steady, the euro isn't likely to move much either way. Finally, Japan releases its industrial production data on Tuesday morning Japan time, capital spending on Wednesday, and CPI on Friday. Industrial production for February is expected to slow somewhat. On the other hand, capital spending is forecast to rise, and the crucial inflation number is forecast to accelerate. So net-net, the news could be positive for the yen. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.